Hey, it's Stephanie Johnston over at the Johnston team of Service First Mortgage and wanted to send y'all out a little bit of information on a tip that we've been doing to get some monthly payments down for homeowners and wanted to explain this a little bit more to y'all. So I hope you find this info helpful. What we've kind of seen with our market shift in terms of house appreciation, which is great. Our houses are going up in value, and property tax changing, home insurance going up a little bit, is just affordability and making sure at the end of the day the monthly payment is comfortable, for the new homeowner. So wanted to just again show you a couple tricks as to how we've been putting these numbers together a little bit counterintuitive to actually yield lower payments and savings. So what I've done below is I picked just a generic situation so that what I'm going to talk about applies to most any sales price or loan amount or situation itself. The premise stays the same. The numbers obviously will be a little bit different. So I chose to look at a $300,000 house with 10% down in the situation below. The other thing to note is we've also just kind of selected some rates as far as an example, and I wouldn't harp on what the actual rates are in the screen or what they're there for, just because that's going to be a little bit different for each consumer and depends on when this was recorded and what the day is, because of course those move each and every day, but the overall premise again will be the same. So what we've done is we've said, okay, we've got a seller that has got a $300,000 house, and that's what they're willing to sell it for, with they're paying their normal fees and the buyer paying their standard fees. So I've got both sides on that. And then instead of that, we've got it kind of comparing is what if the seller sold it a little bit higher and actually used their money toward getting the buyer's payment down. So in the first situation on here, we're going to show a $21.32 payment for the monthly. And just a note, that's going to include the property taxes, the home insurance, the PMI, the full principal and interest, and again, just an estimate for a property here in Texas, but what we'd run. Then it's got the cash to close, a little over $37.7 for funds, and that again is also, closing costs, third-party fees, property taxes for what we need for setting up an escrow account, home insurance, all that 9 yards, just as an example. Again, example. All right, so we say there's option what we normally go with. But what if the seller actually raised the price to $303? So we're selling it for more, which is real strange, but we are going to have them pay $3,000 in closing cost. And we're going to use that $3,000 to buy that rate from 4.375 to 3.875. Well, in that situation, now I'm going to drop to a $2,067 payment, save $65 a month, even though the sales price is higher. So this is, again, backtrack on that. $3,000 more in sales price, higher loan amount, but $65 less a payment. The other thing that's even more shocking is when we come down here, the seller buy down option actually saves $6,400 for that consumer in 5 years. It's crazy. That just makes sense financially, even if it wasn't something that the payment wasn't comfortable to start with. Just a good thing to potentially look to do. Then in this third column, an example of an idea that we can look at depends on the consumer and the end numbers for which makes the most sense. But we took that same $3,000 and I bought out the consumer's PMI. So they basically do not have any monthly mortgage insurance to deal with, same rate, but no monthly PMI here, and that payment's $2,076. And PMI is something that traditionally on a conventional loan is paid monthly, but there's a lot of other options, including just one sometimes where you can just pay a fee at closing and you can not have to have that on your loan at all and you should have a no PMI mortgage. So we use the seller's money to do that, and basically dropping the payment then $65 a month, or $56 a month, excuse me, also saving about $3,600 in PMI over the first 5 years of that mortgage. So again, still cheaper, and then, having that lower priced property. Now in this situation, obviously we'd probably want to go with option 2 than option 3, but I show you both because again, it depends. Sometimes you don't save as much money for paying that 1 point, or sometimes that mortgage insurance saves me more than buying down the rate. It just depends on the exact situation, so we could look at both. Then this fourth option, which saves us the most money, is actually at the highest price. That's at $206 sales price. And that's saving me $122 a month, lowering that to $2,010 by putting the seller paying the PMI and buying down the rate. So a combination, or $6,000 used towards a payment lowering. And we're going to be $10,000 ahead by the time we factor that in for that consumer, which is crazy. So that's just awesome to save $10,000. And if we want to kind of just look over here just to show you what these, or if you were looking, here's where we talk about how much it is on the PMI savings. So the principal and interest difference, same as you can see property taxes, same home insurance, and that's again just estimates. And then that PMI where it comes off on that difference being those total monthly payments that we saw on the screen before. So kind of leave that there for a sec. And anyway, so I just wanted to show you kind of this cool tool. I do want to caveat one last thing on that is sometimes, of course, you say, well, what if the seller won't pay closing costs? I don't know if this can happen. That's something we want to, of course, have convos on. So if you're a homeowner looking to buy, sometimes if there's a lot of offers on a home, the seller might not agree to pay costs. So we need to kind of look at some other creative options, which we have. Or we do have to appraise for that total is the rationale. So if the house was, we were worried it was only going to appraise for $300, we might not be able to go to that higher price. But in a lot of situations, it really does work. And maybe if it's something too that we explain to the seller why we're doing this. So yes, our customer could close without the concessions if we needed to, but we'd like to try because they save a lot of money if I do have a higher price and you pay these figures to get me down in monthly payment. So just something, again, a one-off we can look at based on each specific situation. So anyways, I hope that this was useful information as always, and hopefully we can help you out and save some money and create some new homeowners. So reach out if you need anything at all, and we'll go from there.